Good morning, everybody. It's Ryan with Propelio. Today on The Rabbit Hole with Casey and Ryan, we've got Troy Fullwood, and we're going to take a step-by-step private capital, raising capital, institutional money, private money, and define all what that is, but literally go step-by-step what it means to fund your deals in that direction. So stick around. We'll be right back. Get those questions queued up, and we're going to have a good time this morning. Thanks for being here.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Lifeiner.
And we're back. Hey, everybody. Thanks for being here. Troy Fullwood, CJ, Casey, Dehle.
It's Casey.
And this is the newly named show, The Rabbit Hole.
Not. I don't think that's a great
That's not a good name?
No.
But we do often go down them, so if you like interesting content, tune in.
So before we get too far into the step-by-step private capital, institutional, whatever, just money, who are you? What makes you the authority? I know you've got 20 plus years in this business, but give us like an elevator pitch bio of who you are.
Okay, so thanks, Ryan and Casey. My name is Troy Fullwood with Pinnacle Investments. I've been in the space 23 years, done over 15,000 note transactions. My niche is real estate notes, first lien performing and non-performing residential notes nationwide. And I got in the business primarily because I didn't want to do fix and flips. I didn't want to paint houses and run to Home Depot every 10 minutes to find another nut or bolt or a sink.
I hear you, man.
And so when I started looking into the real estate world, the thing that caught my eye was what the banks were doing. And when you look around any city, even here in Dallas, Texas, the tallest buildings in downtown Dallas are bank buildings. So I'm like, well, if they own the biggest buildings, they must have the most amount of money. So that's how I got interested in notes. I started studying notes, and I started studying institutional players and how they play in that space. So that's how I got my start.
So real quick question to the audience. What is a lien position? How is it defined? And what determines your lien position? Here's your quiz for the day.
Oh, nice.
I don't know, just make it more interactive.
Exhilarating. Define lien position.
Yes. How do you get first lien position? What does that mean?
I mean, that is the golden position.
That is the golden position. Yeah, first lien is the winner's position. No doubt.
Okay.
Absolutely.
So real quick, what can you define what private capital is, and what's the difference between private capital and say like institutional capital?
Okay, so private capital is individuals who have money in a 401k, savings account, money market account, somewhere they control their money. So it could be you, could be me, and it could be anybody that has 50,000 up to several million. The dollar amount is how do you say? I'm trying to think of the word. It could be unlimited.
It could be a lot.
It could be a lot. But
I'm a
private.
thesaurus over here.
Thanks, I appreciate
A
it.
lot.
The thing with private capital is, although it can be somewhat easier to obtain, it also comes with what I call emotions at the same time. And most people that have private capital and they're investing, they've got limitations on what they're willing to do with that money. So they may have, say, $500,000. And you may have a relationship with that person where you can go in and buy and fix and flip houses with that person, but that person's not doing business with typically anybody else because you're, hoarding the money. And that could be a good thing if you're the one taking it. The institutional side of the money is unlimited because the banks and the institutions, their primary focus is to lend money. That's what they do all day long. If they're not lending money, they're not making money. So they have a completely different model that provides more capital, more opportunity for investors that want to grow their businesses.
So just to go down the rabbit hole,
It's not
private capital is literally just going, hey, Casey, I've got a deal. Do you have any money that you want to give to? And she could either have it in her checkbook, in her back pocket, or like an IRA, like Quest Trust or whatever.
Exactly.
And then on that, you could piece several people together, private capital, but like you said, in that scenario where you've got somebody who's like $500,000, that's all they got versus like an institutional that's got like a gajillion.
Yeah.
Okay.
Well, anybody who's got limited capital, once they spend it, they're essentially out of business because they spent all their money. And they're not necessarily going to go out and raise more money because that's not really the business they're in. They're really, I've got retirement funds, Quest money, something like that. I'm deploying it. They're getting a great return. It's typically a very safe return because it's usually invested in like first lien notes, or they're the first deed position on a property. And they just allow that money to work for them. So it's a healthy return, and it's a good return as long as you're playing in that space. But they're out of business. They can't they can't just magically pull money from the sky.
So before we get too far into the step-by-step scenario, do you have any umbrella type questions?
I do. I kind of want to know really, and this might be going into detail, but what would you say are kind of the bigger pros and cons aside from unlimited funding on the institutional side in terms of maybe, I don't know, access or anything like that? Are there kind of, did you find more pros towards institutional, or was it really just a different route?
So when I got started in the business of note buying, the first, private money was not popular 23 years ago. If it was very, quietly addressed. You didn't have people like Quest that were actually promoting those types of things, and you didn't have like databases and stuff where you could go and tap into it. It was really, maybe your Uncle Joe's got a retirement from Chrysler and he's sitting on some money, and you want to go over here and start a real estate investing business, and so you've got that connection. But Uncle Joe's not talking to everybody else. He's just talking to you. So private money was not necessarily as, easily accessible. So when I got in the business, about 18 months into wholesaling notes, that's how I got started. I didn't have any money. I didn't have any capital. I was just out finding notes and then selling them to a company actually here in Irving, Texas, that was run by a good friend of mine, Bob Repass. And so I was selling notes to him. Well, that being said, I was just making margin spreads on all of that. Well, about 18 months into it, I lined up a $1 million line of credit with a bank, and I started using that line of credit to buy notes as a whole. And it's a great investment for the bank to buy notes because we buy at a discount. So that's how I got started. I never ever went down the path of private money, primarily because it wasn't really like in front of me, so I didn't necessarily seek that out.
Interesting. So if you were to get started today, would you say there's a harder barrier to entry now that private money is a little bit easier? Is it easier to get the institutional? Does it just depend on
I personally think that it's very easy to get institutional money. Probably more so today than it was 23 years ago. One, institutions can't afford to sit on capital. That's a no-no in their business. They have to constantly be deploying capital. Now the challenge with that is oftentimes people think institutions, they're thinking just banks. But you've got private equity funds, you've got fund-to-fund funds, you've got endowments, you've got pension plans, you've got life insurance companies. So institutions can be a wide array of things. Now, the thing about institutional capital is that they allocate capital for certain types of industry. So if you come running in the door waving the flag of, hey, I'm a real estate investor, I want to go build apartment complexes. Well, if they don't have capital allocated for that, then you're going to get a big no. And that's pretty commonplace. So you want to understand who's that right relationship for you in the world of institutions, because institutions will invest in tech, they'll invest in pharmaceuticals, they'll invest in all different types of, industries as a whole.
And we may be getting, talk about the end before the beginning, but it seems like in a scenario like that, when I've got ABC fund or ABC institution, and you've got to talk to Joe or Susan, because they're the go-to person. If I know that, it's going to be like private capital where even though it's all about abundance, I ain't telling you who Joe or Susan is because I want Joe and Susan only to work with me. So what's the end to find the Joes, the Susans that have the keys to the Golden City?
Well, no, that's a great question. So one of the easiest places to start in institutional space is a thing called family office. Okay, I'm going to drop a huge nugget here. And you can go to familyoffice.com, and Richard runs that entire organization. But they've got about 23,000 family offices. Now, what is a family office is probably what people are asking. Well, family office is typically a private equity fund or a hedge fund manager that manages money from really, really wealthy families around the world. And wealthy families will put their money with several different, fund managers. And those fund managers, their entire goal is to put it into the marketplace. Now, why do I say family office? Because they're very approachable. very approachable. They have events all over the country. You can show up, you can pitch them, you can get to know them. I would say that 90% of what you do in raising institutional capital is relationships. 10% is your business model at the end of the day. So people can go out, so kind of going backwards a little bit. So step one in any, how you say, institutional or capital raise, you want to have a plan. You want to put your plan together, if that's in the world of fix and flip, if it's rehab, buy, hold, whatever it may be, whatever your niche is, whatever your sweet spot is, build out your business plan. Anybody can typically do that in a weekend, and even if you're not a great writer or a great graphics person, you can go to some place like Fiverr, and you can put down the bones and the structure, and you can give it to somebody to go make it look pretty. And they'll do it for a couple $100. Once you have that in place, then you're going to go backwards, and you're going to write what's called an executive summary based on that business plan, kind of like what you asked me to do this morning. You said, Troy, can you take your bio and shorten it? Yeah, no problem. So I summarized it versus the length that it was. Well, that being said, all I want to see as a capital investor, I just want to see your executive summary. I don't want to see your whole business plan. And that's primarily...
Is it similar to like a pitch deck, or is it literally just
Yeah, I was
verbs?
going to ask, what are kind of just the main components of what that would touch on?
So what you're doing with an executive summary or a pitch deck is you're just, and they're one and the same essentially, you're breaking down your business plan. Instead of it being 20 pages, you're putting it down to 2 pages. So you're highlighting what your goal is, what's the current condition of the industry, and basically who's on your team or case studies.
So for someone like you, and not to name drop Troy as he's sitting here, is your executive summary like, "Hi, I'm Troy. I have access to X amount of money"?
No.
Because I know what the number is, but I'm not gonna like put your business out on for everybody to know. Like, because when I heard it, everybody's like, "What?" It's a lot. Yeah. That's that number, a lot.
Heart be still.
It's whatever you think the number is. It's a lot more than that.
Well, this is what you're putting together to actually get the funding, correct?
To get the funding.
So
yes. Yeah, that's a door opener. So your business plan is your model. The executive summary, your pitch deck is your, how you say, door opener. And the reason you want to scale it down is because anybody you're talking to with capital, they've got maybe 10 to 15 minutes worth of time to look at what it is you want to do. And if it doesn't resonate with them, they're going to move on. And you should move on as well. Right. In other words, don't try and, how do you say, sell them on the idea because they're not interested in it.
So, and it's interesting we're talking about this because like a week and a half ago I was in New York with the Zuckerberg Institute and we were talking about pitch decks. Yeah. That was the whole, the mastermind meeting about it. And they boiled it down to your pitch deck is 3 things. It's what's the problem? How are you going to solve it?
Yes.
And why are you the person to solve it?
Yeah.
Would those 3 things be similar to here? Because it doesn't seem like there's a problem here. It's just maybe instead of a problem, it's like here's the deal.
Yeah. Yeah, and that's another way of putting it. Absolutely. What's the problem? How are you going to fix it? And who are you at the end of the day? And you're doing the same thing. Like, what's the problem? Well, in this area of real estate, there's not enough multifamily apartments in, how do you say, this area of the country. So that's the problem. We can build them. We can build them for X dollars. And then you go into how that works. And then who are you? Why is it you that's going to do that? Well, I'm going to do that because I already manage, say, 250 doors or 5,000 doors, whatever it may be. Absolutely.
So I know we've already been in it like 12, 13 minutes here. And we talked about doing this step by step. Right. So like with anything with real estate, what's step 1? It's the deal. So I have a deal.
Yeah.
I need funding for this deal. What's step 1 in a deal? In this scenario, it could be a note, it could be a non-performing asset, it could be an actual fix and flip, it could be, for this purposes, it's just the deal. So what's step 1?
So step 1 in the world of capital is your business model, your business plan. That's step 1. Take your ideas, take your experience, take the team that you built, and now put it in a written format so that people understand it.
In a written format, is that like the executive summary we were just talking about, or is that like a 20-page
like
bio?
A 20-page, like a 20-page, breaking it down.
The deal or you?
The whole business model.
The business model.
The whole business model, whatever your business model is. So if your business model is to say, go and build apartment complexes in, I don't know, Pensacola, Florida, because there's a lack of multifamily housing there or something. Well, that being said, why are you that person to do it? And what is your experience? Who is your team? What is the, how do you say, the current condition of that area of the country, both pros and cons. Now, this is the nugget here. Oftentimes, I'll read business plans or even pitch decks, and they'll be, how do you say, silver lining based. All they want to do is tell you all the good stuff. And capital fund managers, they know that there's a dark side to every deal that they look at. So you have to be transparent and put the risk involved, whatever they may be, associated with that industry, that marketplace, or that, area of the country. And you have to be transparent in that. The other thing you want to do when you're building out your business plan is you want to seek out supporting documentation, supporting reports, supporting case studies for your model.
So in this scenario, would it be like the comps, the comparables, or the actual comparables of the business plan itself?
So, like, let's say,
Feel free to jump in every time.
Yeah, y'all are handling it real well.
So let's say you're building a multifamily in Pensacola, Florida. That's your model, and you're focused on that area. And the reason you're focused on that area is because the Department of Housing came out with a report showing that there's a lack of it, and that there's like a 10-year demand for that multifamily model. And you come out with things like that support what it is you're saying. So it's not just Ryan saying it, it's not just Troy saying it, it's not anybody just saying it. It's like, this is the idea, this is why we're the team to do that, and this is why we're going after this space. Because the HUD Housing is saying this, it's featured in the New York Times, it's featured in the Wall Street Journal, things of that nature that supports your idea. Now you can find those things by simply Googling it, literally. You can go to the housing, urban housing development and things like that, and they'll give you all kinds of statistics.
And I think this is a good practice, even if you maybe aren't as kind of advanced or experienced. This is an amazing exercise to do, even if you are just getting started, because it's going to help clarify for you as well why you're choosing a certain strategy, I would imagine.
Absolutely. Even in Dallas, if listeners are out there listening to, fixing and flipping in the Dallas marketplace, well, why Dallas?
Yeah.
And they need to do that research versus just listening to somebody say it, like, I'm killing it and I'm crushing it in Dallas. Okay, well, why is he crushing it when these reports are showing something different, or the reports are saying exactly what that person's doing?
So step one is to build out this business model, business plan for the deal itself. In it, we need to have who we are.
Right.
We need to have what the deal is itself.
What the problem is.
What the problem is. What the surrounding supporting data is for that problem. Is this where you break down the numbers of the deal itself, or is that later on?
You would put like a couple of case studies in there. You would maybe use some other apartment complexes in the area, how they're cash flowing and things like that. Even ones that are for sale, because you don't necessarily have to build a model around building apartment complexes. Maybe build a model around buying apartment complexes and upgrading them and things of that nature. So you can pick some case studies of particular properties that are for sale. Now, I know there's certain people out there going, well, I would never give that information out. Here's the point. We're playing big here. Okay, if one apartment complex is your golden ticket, you're not thinking big enough. Okay, and you want to be able to have those data, those numbers to put in there as a case study to show whoever your capital providers are that, hey, this is real world. This isn't just I woke up this morning, I had this dream last night, and we're going to do this. It's like, no, this is 3 or 4 case studies.
So when you say play big, so at this level of trying to acquire, institutional capital, what would you say are the types of projects that you would maybe focus on?
I would focus on things that are like commercial, industrial commercial, shopping centers, hospitals are big. People think that like in Arizona we have Banner Health. I'm not sure who's here. They think that Banner Health owns the hospital. The hospital's not owned by Banner Health. It's owned by a private equity group that leases it to Banner Health. Banks, oftentimes banks are not owned by banks. You think they are, but they're actually owned by private parties. Post offices are owned by private parties, not the federal government. So there's a lot of things that go on in the background. I've seen people raise capital to go out and build more post offices.
Interesting.
Yeah, and they'll go out and they'll build them, and then they lease them back to the federal government on a 20-year lease, with 5-year reviews along the way. And they do amazingly well. These are just little segments. So going back to the original question, I would focus on commercial. I would also focus on notes is my specialty, so I focus on that. REOs and fix and flips and stuff like that. If you're going to scale big, you can raise some money in that. But if you're just like, I'm going to flip 3 or 4 houses a month, that's really more private money than it is institutional money.
Because I'm glad you brought that up, because that was my next thing is like, because in my experience when it comes to like private capital for fix and flips or like that, and again, it's limited. I'm not one of these like, but it's more like, hey, here are the numbers of the deal. Do you want to do it, yes or no? What are your terms?
Yeah.
And then it's just determining, and it's like, you know who I am, or hey, we have a relationship. Hi, Casey, I'm Ryan. I do fix and flip school. These are past HUDs.
Right.
This is where I've lost money, but I paid my lender in full. This is the current deal. They're the numbers. Boom. The scenario you're talking about, where it seems like if I did all that work, you could do it at scale for even a private lender. Be like, look, I need access to $10 million because I'm not looking to do 1 or 2 deals at a time. I'm looking to do 20 deals at a time.
Yeah.
But it seems like taking that, what you were just talking about taking that 20-page, 30-page breakdown of who you are, what you're trying to accomplish in the zone, or not zone, but in that area, would make sense.
Yeah.
And I don't think anybody's. I don't know anybody. I don't see anybody doing that.
Well, no, that's a great. So I would take a deal like that. I would probably take it more towards like family office money, which will typically, start at a $10 million raise. They'll go up from there. But you want to have a real dialed in model. So maybe your model isn't fix and flip. Maybe it's buy, fix, hold, and you're developing cash flow from that. That would be very attractive to the institutional space because you're able to debt service that capital instead of accruing interest on it.
So that's step one.
Okay.
Is there anything left in step one?
Well, there's a lot. There's one more thing in step one.
Step one, sub A through Z.
That's pretty much it. I mean, we could just have a whole show just on step one because of just how intense it is. But one of the other things you want to do when you're building out your business plan, your business model, build out your team. Okay, go and build out your team. So your team are you and your partners. If there are partners in it, you want to have who your accountant is, who your legal firm is. If you're working with a particular title firm, you want to have them in there, and have all of them write testimonials on your behalf and put those in there. Also put their bios in there as well. But yeah, build out your team.
The biggest thing I'm hearing with step one is this is so funny because it's like I'm about to say it, and it's like, well, no shit, Ryan. But it's like, treat it like a business.
It's funny you say that, though, because I think the biggest piece that's missing from, especially people getting started, is they really are just hustling for the deal, and they aren't taking the time. This is something, after a year, I'm like, okay, time to work on the business. And you really, to get to this step, you have to have that kind of clear vision, or it's going to force you to, if you want to scale, right? You reach a certain ceiling until you have a business plan.
So I think that's a good segue to a break. When we come back, we're going to get to step one, sub B.
Yeah, sub B. There you go.
Great. We've got Troy Fullwood in here with Casey and myself. If you're liking what you're seeing, please like, please share, please comment. When you do that, you're basically telling the internet that you like this content. So again, I know that sounds, Danny went on a tangent about it yesterday. It sounds ridiculous, but trust me, if you want to pay us back, yes, you can send me money, but if you just want to give us likes and clicks and all that stuff, that does well too. So sit back, stick around. We'll be right back after the short break.
Awesome.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com.
A lifetime to me.
Hey, welcome back. If you're tuning in, you are in for a treat because we are with Troy Fullwood. I hope I got that right.
You got it
Fullwood.
right. Yep.
And Ryan, obviously, we're here talking about maybe a little bit more of an advanced topic, but something that will help you think bigger, and that is raising capital from more creative sources and maybe thinking a little bit bigger in your business plans. So we left off still hanging around step one, which was really about how to build almost like, what did you call it?
Business plan.
A business plan.
Or a prospectus.
For lack of better terms.
We're good with this. Like, I'm stuck on a lot, and you're on
business plans. It sounds really simple, but there is a lot of thought that goes into this and a lot of clarity that you need to have, right, in terms of the space you want to go into, what the problems are that you're trying to solve in the real estate industry. So
Absolutely.
Let's just pick up where we left off. We were talking about your power team and putting that in the business plan and maybe getting some testimonials.
Yeah, absolutely. So as you're building out your business plan, you want to make sure that you put together your team, whatever your team is, and then you want to make sure that they've given you some testimonials, or even get testimonials from people you've done business with in regards to buying houses, selling houses, things like that. Put those in there because they're always very, they just add credibility to what you're doing. And here, let me back up a little bit. Don't think that business plans are just for raising hundreds of millions of dollars. Everybody should at least have a business plan if they're just raising $1 million. You'll raise $1 million really fast if you have a business plan.
It's true.
Because you're clear. You're very clear and very focused on what you're doing.
Well, if you think of it logically, though, it's like if Casey and I were coming to you for $10,000. Let's lower the scale so it's more attainable for everybody watching.
Okay.
You know, because $1 million, that's not that much money anymore, but it is.
Yeah.
But let's just say we're going for $10,000. Even at the level of $10,000, if we come and Casey's got a 30-page document breaking down who she is, who her team is, et cetera, et cetera, et cetera, and I'm like, Troy, man, give me some money. Who are you going to go do business with? You're going to do business with the person that's, hopefully.
Always say
Me,
All right.
Casey.
There you go. But I mean, so that, I think, like you said, it makes sense at any scale of what you're trying to do.
Well, and the thing about the business plan as a whole, it creates focus. There's every single day I talk to real estate investors and they're like scratching their head on what's the next step for them. Like, well, if you had a plan, if you had a focused plan, you wouldn't be asking me what's the next step. You'd already know what the next step is. And that keeps me on the straight and narrow. Trust me, I see deals all day long and I just throw them in the trash. Why? Because they don't fit my model. It's not that they're bad deals. It's not that they can't make somebody else money, but they're not my model.
So two quick questions. I know Matt Smith was asking earlier, is there any resources, any books that can help you build out a business plan?
I'm going to make a mistake if I do this. This is going to light this thing up. I have a sample business plan that I'll give you.
Just say I'm not a lawyer.
I'm not a lawyer.
There you
Okay,
go.
so I'm not
This
a
is
lawyer.
not legal advice.
This is not legal advice. But if you, can I give it to you guys, or should I have?
You give it to, if you want it. If it's
I'll
a document,
take anything you want.
If you want, you give me a document. We'll drop a link later, and we can email it out.
Okay, perfect. So we'll do that. I've got a pro forma structured business plan that goes through all the basic things, and then you get to customize it any way you want.
That's amazing.
We'll build out a link later. We'll get Simon to build out a link, and we'll drop it in the comment feed and whatnot.
Yeah.
Well, see? Good for asking, Matt.
Second question.
Yeah, great
good job
question,
on you, Matt. Second thing Kristen was bringing up, and it builds on a question I was about to have, is
of course.
Should you... No, my question was, should you have kind of like my thesaurus is broken. Like just kind of like a back pocket business plan that just like rinse and repeat for anything you're doing, and you just like take new deal, put it in there, and then Kristen, what she was adding was the business plan should be able to change with the seasons.
Absolutely.
Definitely, yeah.
Absolutely. So
I know there's two different thoughts.
Well, when I got started in the business, I was just wholesaling notes. So I was doing onesie, twosie, threesie, foursie, selling them to the institution here in Irving. And that was my starting point. Now it's a completely different business plan, but it's evolved. It's just slowly grown, and I can cut and paste as I've needed to change things. So absolutely. But keep in mind, there are so many great ideas out there in regards to real estate. There, there's the development side, there's the multifamily, there's the fix and flip, there's the buy hold, there's the Section 8. Find what resonates with you. Resonates? Is it resonates?
Yeah,
resonate. Okay.
I'm the dictionary today.
Find your sweet spot and then stay in that lane. People oftentimes will get that shiny object syndrome. and they'll go off on this tangent or this tangent, and that'll kill a business faster than anything because they're not building on that momentum. And if you want to evolve over time, maybe you're fix and flip, and then you go into fix, buy, hold. Then that's naturally progressive, and then people will tend to go into more commercial, multifamily. That's a progression in the space, and it's a healthy one. But make sure that you don't get off on these different tangents.
And I think something that's important to point out too is like that should, I mean, if you're just getting started, think about these things too, because I think it shows an understanding of the market when you're able to niche like that. When you're just kind of trying to pull everything and go everywhere at one time, it becomes really difficult to scale like this. So a lot of this content probably seems unattainable for a lot of the viewers who are kind of in that level. So I just wanted to point that out. I think it's good to look at the creativity in real estate. There's so many different avenues you can go.
Absolutely. You know, the reason I picked what I picked was because it was my niche. It's what I fell in love with. And it's not that the other niches don't make money. I mean, my goodness gracious, I've got a lot of friends that are buy, hold, fix, and flip. And, you know, Corey's going to be here tonight, and he's in the multifamily space he's crushing it there as well. And God bless them. Good for them. You know, but I'm going to stay in my lane.
Yeah,
so,
I like that.
Not to cut us off at step one. What's step two? Now that I've got,
He's keeping us in line.
He's
like Troy said. If you, what we'll do is after the show, may not be today because we're busy with the event and whatnot. But look for I'll put a link somewhere in here, either on the both Facebook, YouTube, and then we'll get that business plan out there to anybody who wants. Not a lawyer, education for entertainment purposes only.
Exactly.
So now that we have a business plan,
right?
What's next?
Then I would reduce it, or as they like to say in government, redact it, and pull out what you want, and then put it into a pitch deck or an executive summary. And that's usually 2 or 3 pages. That's something that no matter where you're raising capital, so you can send them a summary, and that gives them a taste of what it is you're doing. And they'll tell you really quickly whether or not they have an interest in it. And that just makes it a lot easier. In other words, you're summarizing what you're doing. You're super respectful of their time. The one thing I've learned about institutional players is they value their time. Their time's worth thousands of dollars per hour. And if you respect that time, then they'll reciprocate.
So on that, because I like that, because one of the things we were talking about in the Zuckerberg Institute a while back was don't be fake with emails. Like so often it's like, hey Casey, how are your kids? How was your week? How was your summer? How was this? By the way, I need $10 million. Do you want to fund my project?
It's true.
Would you, because if you don't have that relationship, should you just skip all the fluff and go, Casey, best regards. Here's a deal. Let me know what you think.
Absolutely.
Is that the route to go? Bam, hit him in the nose.
You know, that's exactly what I would do, and that's exactly what I do. And it's funny, if you ever get emails from me or text messages from me, it's really just kind of on point. Like, hey, sounds great.
Yes.
You know, sounds good. And it's really not to be rude or be interpreted as anything. It's just that my time is incredibly valuable.
Yeah.
And so I'm just like.
So Germans are like this. I used to work with Germans overseas, and I will never forget a new employee sending this long email to our CEO, who's a very powerful man. And it was really flowery and fluffy because we have a lot more, language in English versus German. And he literally wrote back after this like long page email with all these questions. Next time, shorter. That was it.
Yeah.
Didn't answer any of the questions or anything. So I love that point.
Yeah.
Well, I know even here in the studio, it's like when text messages, or I'm sure Tommy's heard me loudly express myself. It's like, get to the point.
Yes.
Yeah.
Like.
Yeah.
So we're not being rude,
I know.
y'all.
Yeah,
it's just we gotta get going on some points.
But you're talking about emailing these people and reaching out, and you're talking about the executive summary. But who are you emailing? And like, when do you research these people?
Yeah, that was the question I had.
Because I know we talked about it at the very beginning, but we talked about it almost like a afterthought. Who are we reaching out to?
So
where do you find those people?
What you're reaching out to, so one of the easiest places to go is like Family Office. You can go to familyoffice.com. You can buy their database. It's like $379, and I think it's got about 400 or 500 just U.S. Fund managers. And it gives you their exact contact information.
So $400, familyoffice.com, and I get a list of people, and then I can just start. Do you do intro emails, or you just go straight for those, hey, here's my deal?
I go and I review their website, number one. So I want to go to their website and see what their niche is. So they've done it at familyoffice.com. Richard's done a great job of saying, okay, do you want a real estate, people that are invested in real estate or interested in real estate? And he's just scaled that down. The whole database is about 20,000+, but he's got just a real estate database. And those people, I would still go to their website to find out what is their niche. Is it development? Is it land? Is it commercial? Is it hospitals, churches, whatever it is? And they'll oftentimes, not oftentimes, sometimes they'll put up their portfolio, what they bought in the last 12 months, 24 months, and that'll give you an idea. So if yours is like theirs, then I would email them.
That's awesome.
And on that is and I'm sorry if this is in the weeds, but is it, hey Troy, I was reviewing what you did, I believe my deal would work, here's an executive summary of it, or is it download the 1,000 people, MailChimp, blast out and see who bites? Because again, 1,000 emails will take 1,000 years. One MailChimp blast will take 30 seconds.
I do it personally. I'll have a VA do it. Or after I've combed through, say the 400, there might be, say 50 that would like my deal, that are interested in notes. So that's my niche, is notes. So I would look at those 50 and just personally email them. And it's really just cut, paste. And you're coming from that private email address to their essentially business private email.
And you're talking about research their niche. Are you then either having like a VA or yourself? I apologize if this is weedsy.
No, this is good.
Great.
In the weeds.
Again.
In the weeds. Anyway, sorry.
The
Show
name
names.
of our
Well, like getting into LinkedIn, because LinkedIn, everybody's accessible, and you can almost see like, Jon Snow went to the Night's Watch University. Game of Thrones reference there.
Yeah, there you go.
You're like,
so happy.
Yeah. Is that getting too weedy, or is that something that's smart?
Well, I think if there's a connection there, I would definitely bring it up. I wouldn't email them or message them through LinkedIn.
That's a waste of time.
Yeah, that's a waste of time. I would simply email them. First off, I'd find out their company. I'd say, okay, hey Rob, this is Troy Fullwood with Pinnacle Investments. I was on your website, saw that you guys are in the same niche that we are. I think there might be some synergy there or partnership opportunities. I've attached my business executive summary. I'd like to talk with you after you review it.
Speaking of LinkedIn, just found this app. It's called Snove.io. I'll drop a link in the comments. But it's an email scraper. So you can go to LinkedIn and type in Note Investor, and you click the Chrome extension, and it'll populate their email addresses.
Nice.
And then you can email them.
Interesting.
Yeah.
I like that.
Because LinkedIn, you used to be able to export email addresses, but they turned that off.
Interesting. That's good to know. There's so many ways
to
get information.
FamilyOffice.com, pull a list, scrape through, find your niche.
Yeah.
Then from there, scrape through even further to find if your deal would work out. Then reach out personally with an executive summary.
Yeah.
And then what?
In that email, what I would ask for is 15 minutes of their time to discuss the matter in greater detail if they're interested. That's what I would do. I would put the onus on them, not on me. I wouldn't. In other words, I won't force myself into that circle. If that makes sense. Oftentimes people want to force themselves into the circle and they keep knocking on the door. That becomes irritating. If that fund manager is managing, oftentimes the average balance of their funds that they're managing is anywhere between $3 to $5 billion. And if they got somebody over here knocking on their door for a deal that may or may not work while they're focusing on other important tasks, you'll kind of get red flagged really, really fast. Really fast.
So here's something only, and I'm thinking this just because we had a gentleman on several weeks ago, about a month ago, Tony the closer, Tony Robinson.
I love Tony.
One of the things that because he was trying out for the NFL, and he was sending his tape to everybody, and then you get on the phone, like just watch 30 seconds of the video. Would it be creative, or is this world kind of like old school, like it's on me, but like maybe do a YouTube video breaking down who you are, breaking down what the deal is, throw it up there and be like, look, hey, do me a favor, click this link. Is that overthinking it, or is that just kind of too creative, too 2019?
It depends. I think some people read faster than they do listen or watch something, so it kind of depends.
I don't think it would hurt to do that. I've never thought about doing that, but I don't think it would kill a deal. It might, some people are much more like, I like watching videos versus reading things.
Right.
And it's ironic that I'm in the business I'm in, but I prefer to like watch a 5 or 10 minute video real quick. And there are fund managers that work the same way. So I wouldn't say not do it. I've just never thought of it. So
Well, because I'm just thinking in terms of if I've got, even if it was like an email like this, I'm like, if the first sentence is something annoys me, I'm like, ugh. But if the first is like, hey, watch this video real quick, I might be like, click.
Here's what I would do.
Note on how to get a hold of Ryan.
If
You
you
make
want,
a video.
so one of the things that we own is we own a data firm, and I'm not here to talk about that, but we do a lot of emailing. And one of the key things about sending any email to anybody is your subject line. You've got 3.6 seconds to grab their attention. Or I think it's 3.1 or 3.6. So that subject line is imperative when you send out an email. So it's not like, hey, Joe. It's like, okay. That doesn't really get me to do anything. But you can put something like increase returns in the real estate field. Well, that's going to speak to somebody who's in real estate or is interested in real estate. And that'll get them to open up your email, review what you have, and then go forward.
Yeah, speaking of email, and this is, again, a rabbit hole in the weeds, whatever we want to call it. We went, the Propelio team, we went to a digital marketing conference last fall. And one of the things was talking, because we'd always thought email's kind of dead, but it's not.
Oh, it's huge.
It's huge. But again, talking about you were saying 3.7 seconds. I think it's even less than that.
Yeah.
Because if somebody's scrolling through their email box, you've got less than a second to get somebody's attention. In the email.
Yeah, I was always trained to actually put the question, the crux of the question I have in the email, so that they could literally roll through and know the gist of it, and that way I'm not pressing for their time when they have the time to go to it and they know what they're looking at.
Like a great subject line is, would you be interested in this? Because it leads to a question to them. So would you be interested in this would be something I would click on, interested in what? What is it that you have? And that'll get them
emoji, click me, emoji.
I hate that stuff. That's good for retail, I think, because I see that a lot. But I agree with you on questions. It kind of, you have to understand the human psyche and what would make you open something too when you're putting something out there.
So we send the email, hey, 15 minutes. They What is that 15-minute call like? 15-minute
call is simply allowing them to ask you questions about your business plan. So they can.
But when do you send the business plan? Right now, you've only sent the executive summary.
Ask questions about the executive summary.
Got it.
And then if they're interested in more, you've already got the business plan done. What happens with most people is they'll do the executive summary, then they'll get a live one, and like, hey, can you send me a business plan? And it's like, oh shit, now I got to work all weekend, or I got to spend 2 weeks doing the business plan. And all of a sudden,
they forget who you.
Yeah, they're like, all right. Whereas if you can say, yeah, no problem, I'll send you the full presentation. Give me 20 minutes, 30 minutes. I'll send it to you by the end of the day, and it's very acceptable. That's why I say do that first, because they're going to ask for it. If they're truly interested in it, they're going to ask for that, and then they're going to want to sit. They're going to get their team. First off, they're going to have their analytics team review what it is you've sent them. So that's why I say you've got to be honest and you've got to be spot on with your information. They're going to have their analytics team review it. And then if everything checks out, then they'll get on the phone with you and do a 30 to
So the business plan, that's almost like, and again, we don't need to go back to step one, but it's almost like a de facto prospectus as well, right?
Yeah.
Okay.
Absolutely. And that's
using big words today.
You are.
This is awesome.
I read a book once.
Midweek and we're up and rolling.
Yeah.
That's awesome. But that's what ultimately will happen step by step. Now, if they don't, after that 15-minute call, if they're not interested, they're like, hey, this is outside of our wheelhouse. We're just not interested in this. And you haven't wasted a lot of time.
Do you do the typical real estate thing? Do you know anybody that is interested?
Oh, that's a good one.
Were you about to slap me?
No, I was going to say, because we say in real estate all the time, although sometimes I want to, we say in real estate all the time that money's in the follow-up, but it seems to be the opposite case here, and that you're really targeting, and if they aren't interested, move on. Kind of like that unmotivated seller. You just move on.
Right. Well, what I typically do with fund managers is thank you so much. What is your sweet spot? What is it that you're going for? And this right here will open more doors than anything out there. And that is reverse engineer the relationship. So when you're sending them a prospectus, you're actually asking them for something. Well, why don't you lead with bringing value into the relationship?
Ah, golden nugget.
So what I find, and even if they are interested, what else are you guys investing in? What other divisions do you have? Because even though their website might be somewhat extensive, most of their websites are typically 3 to 5 pages in length, and they do that intentionally to just kind of summarize what they do. and they don't necessarily put their entire team on the website. So they'll have different divisions within their organization that are out doing other things. So you can ask them, like, what other things are you folks doing? And how can I serve you? How can I keep my eye open for other projects for you?
So to summarize, what you're saying is like, yes, I have the 1, 2, 3 deal, the deal at hand that I'm trying to get funded today. You're not interested. Okay, but what are you interested in? In that case, I come across that.
Yeah.
And by that, you've already narrowed down that 1,000-person list to the one person.
Sure.
And then you've expedited that process of finding money on the next deal.
Absolutely.
One thing I just want to clarify before we take a little bit further. Now, you keep talking about having the deal that you're looking to get funded in the prospectus, so to speak, or the business plan. Would you ever generally, just to kind of maybe get a line of credit for a said project rather than having something specific on the docket, right? So that you're prepared to go out and acquire properties or develop or build or whatever it is you're looking to do. Is there a difference there? Do they want a specific project, or do they just want something?
Well, there's two ways you can do it. You can approach it from a project by project model, or you can do it in the form of a line of credit. Like ours are all put together as lines of credit. So we have very extensive lines of credit where we buy and sell institutional paper. That being said, our values our balances are constantly going up and down, and it's much easier to do it that way than to say, okay, we've got this other pool, here's what we have, We already know what the boundaries are on the relationship, so we make sure the product we buy is within those boundaries. If there's a toe sticking out or something like that, we may go to committee and say, hey, we want to buy this asset or this pool.
Forgive me, what's that reference? A toe sticking out?
A toe sticking out.
Like if you're trying to go maybe outside the boundaries that you've set for a particuar asset or project.
Thank you, Casey.
Yeah.
You
Yeah.
get the permission.
So it's time for another break.
He gave me that look.
When we come back, we're gonna follow up, because right now we've got a live one on the hook. We're talking to them. They're interested in the deal, and let's break down going to where we actually have money in the bank to fund the deal.
Yeah.
But first, we're gonna take a break. If you like what you're seeing, please like, share, comment, all of the above. Tell the internet you love this stuff. If not, you're breaking my heart. Anyway, we'll see you back in a little bit. The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com.
It's like Lady in the
We
Tramp.
are back with Troy Fullwood, my lovely co-host, who's using really big words today. We are definitely talking about something that I don't think has been covered that much, and that is raising capital with institutional partners, and really step by step what you would do, how you would research, and how you would approach them. So we are on, is it step 3? We don't know, but we're on the step of we've emailed some people, they've looked at our business plan, and they agreed to 15 minutes of their time, and we are going from there.
Yeah, let me kind of go back a little bit on the email thing. When you send emails to institutional players, put a signature on the email. Like, put your information, like, who are you?
I'm glad you said that, because
Seems basic.
it seems basic, but I'm like, you know what? It's probably needs to be said.
You'd be surprised how many emails I get per week where people are just like, they sign off like
Ryan.
Tom or Ryan. It's
Thanks,
like,
Ryan.
Yeah, thanks, Ryan. It's like, okay, who is this person? Where did they come from?
Yeah.
How do I contact them? And the only source of
research them.
Or research them, yeah. And so and you have to keep in mind, the institutions, like, they are not necessarily, they don't have an open door policy. So you're trying to like crack that door open. So you want to make sure all of your I's are dotted and T's are crossed in order to do that. And part of it is, do you have a professional signature? If you don't have one, go have somebody off of Fiverr build it for $5 and put it together. Build out a website so that you have a company website, because that's a digital footprint that they'll research you on. Have a LinkedIn page with that's done professionally. Pay $50, $60, $100, whatever
I
it
didn't
takes.
even know that was a thing.
Yeah.
I didn't either. I'm
All
like,
right.
Yeah, like
If
put
you
it.
build
we're going to
LinkedIn
pivot the
pages.
show to LinkedIn.
But that's what they're going to do, because if you're a newcomer to the space, one of the things they're going to do is research who you are.
Yeah.
And your digital footprint is your biggest signature out there. By the way, if you've got a Facebook page and you've got all kinds of like ridiculous antics on your Facebook page and you're trying to raise institutional capital, go and clean up your Facebook page. Delete a bunch of stuff. Things like that make you look normal in the world of institutional money.
Normal.
Yeah, it's fun. I'm
I
glad
like that. Normal.
I'm
We're
glad
not
you brought that
normal.
up at the signature, because like it even in our little level of just like, if I email Troy and Troy emails back, and maybe I just want to clean up my contacts list and add data, and it's like, dang, there's 17 Troys. Where's Troy Fullwood? I don't know which one it is.
Yeah.
If you don't have a signature, it's like, how are you going to update that stuff? So I even see that in our just emailing people here.
And these are the basics that can really make or break you in this
talking about
industry.
super basic.
But it's true. These are the things that are the building blocks to be successful, because a lot of people might do a beautiful business plan and have an amazing idea,
But
and
even
these
if
little
it's,
things aren't there.
that's the call to action for right now. If after this show, go to your damn emails and see if you've got your
Go
even on your
clean
cell
yourself
phone.
up,
Yes.
everyone.
Like, because my cell phone email signature is sent from iPhone, so they know that, like, the brevity of it, and then it still has thanks Ryan Harper, Propelio. Blah,
Yeah,
blah,
I've got
blah,
a full
confidentiality statement, and it looks professional. And that's the
Yeah.
irony, is our signature looks professional.
Well, and that's the thing. You're asking somebody for $1 million, $5 million, $10 million, $20 million dollars.
Have a
but,
signature.
Yeah, have a signature. Don't act like this is a hobby. Act like this is a business.
Boom.
Because if not, they see automatically that you're not taking it seriously. So once again, it goes back to they'll value your time, or they'll value their time, and they'll delete it. I mean, I get it all the time. I just delete things. And people are like, well, I sent you an email a month ago and you didn't respond back. I'm like, well, your email sucked, and I don't have time to.
Please tell me you said that to somebody.
Oh, I do. I mean, so the difference between all of us and Warren Buffett is one thing, really simple. He trades his time for more money than we do. That's it. He just values his time that much more. So when people start to value their time, they start to earn more. They start to make more. They have more freedom. They have life by design. That all kicks in, and therefore you grow your business exponentially. If you're running around and dealing with things and drama and all this other stuff, what I call lower level energy in the space, that's a very vicious cycle.
So
Yes.
Since we're talking about the emails and the
Yeah.
signatures and just basic fundamentals of business, one thing that my dad taught me many, many, many years ago, and it never stuck, but it still hasn't stuck. Like, he's an architect.
Okay.
And he works in like the consulting world of architecture. So everything's very blueprinty, numbers, like blueprints.
Sure.
But he said the number one skill that he has in like the one thing that makes or breaks his business is the English.
Yeah.
The ability to mold words to whatever you need to be done.
Yes.
So, and I think that's law, especially in 2019, especially in the real estate world, is ability to mold words to prove your point.
Yeah. Absolutely.
I
I
think that's
wanted to
great.
be an architect when I was in high school.
Yeah.
Yeah. So when I hear about other architects, I'm like, oh man, that was my first career, my first choice.
We all have one,
Yeah,
right? I feel like we go back to it maybe in some form.
My wife often asks me, like, if you weren't doing this, what else would you do? And I'm like, I'd go be an architect, because I loved it.
So here's another quiz. If you watched last week or the week before, what did Ryan want to be when he was a kid?
I know the answer.
We'll see in the comment section. Drop in what you think Ryan wanted to
the
be
best.
as a kid.
I think you'll do it someday. I really do.
Someday.
It'll get funnier once we reveal that answer. But anyway, back to important things.
Exactly. So we've got the email, we've got the people, they're on the hook.
And so when you talk
Give me
to
that money.
somebody, so when you're talking to somebody, let me go back to like the email part, and I'll move on. One of the things that opens more doors than anything is a thank you card. Not a thank you email, not a thank you text, but a thank you card. And what that does is it's outside of the norm anymore. We're a very digital world, and so we're very fast-paced moving and things like that. So you want to stand out over and above everybody else that's asking for money. Send a thank you card. Go to Walgreens or CVS and buy a box for like $4 and write it out. If you don't have great penmanship, have your spouse write it out and then send it off to them as just a thank you card. And you could even go as far as putting like a $10 Starbucks card in there. Like, I wish I was closer. I would personally buy you a cup of coffee, but here's one. And that like sets the world on fire. Time and time again. I open more doors on Wall Street by just having an attitude of gratitude and looking at who they are. Because like you keep wanting to go back to give me the money thing, which I respect, but at the same
he's about to troll and shit on me.
Simmer down, Ryan.
But it's not about the money, because the bottom line is they want to have a relationship with you. They're never going to give you or me or anybody else money unless they know who we are and they know, like, and trust us. Hands down. They have to know, like, and trust us.
This is a theme that comes up no matter what topic what we're talking about.
Or business.
Business, anything. And I always tell people when they're trying to get sellers to sell to them, or it's the same thing. You have to earn the right to ask them for something so grand as to have them sell their house to you or to give you $10 million.
Yeah,
got to earn the right.
Like, so one of our relationships is Morgan Stanley. And the guys that I deal with at the trade desk in Morgan Stanley, one of them is a alumni out of U of A. He's a competitor. I went to ASU. I actually dropped out of college. I'm a college dropout, but I still have my little, I say, semester.
It's the cool thing to do these days.
Yeah, well, that was so 84. But he's a rival. But we have a great time bantering back and forth. But every time I visit his office, I'll leave and I'll send him something. And I know what his sweet spots are. Like, one of his things is he likes rye whiskey. That's one of his sweet spots.
It's a good man.
So,
Are you okay back there?
Yeah.
I heard him moan.
So I'll make sure that I'll send him something. Now it's always got like an ASU sticker on it, just to let him know that I'm still around. But it's developed into this great relationship because I respect his time, hands down. I'm telling you, time and time again, we spend anywhere between $5,000 to $10,000 every Christmas just on gift baskets going out to major players. Guess what? I can text these major players on their private phone. I can call them on weekends if I need their help. Now, I don't abuse it. I don't call to find out what they're doing this weekend or if they've seen the Avengers movie or something like that. But if I need something, they'll answer the call. And that's the whole point in having that.
Yeah, and I love that, the gratitude, because I know anytime that I've either done a thank you note or like a voice message, and I know the voice message, it kind of goes against what you were just talking about.
Sure.
But we're in a different little, different world at the moment.
Sure.
But anytime I do that, again, people are surprised.
Yes.
And then as far as receiving, it's like when people send us stuff, we're like, first of all, again, we're surprised.
Yes.
And we're so great. Like TJ, he sent this little guy, and now it's on our set, so he was in Scotland, sent it to us.
Oh,
I brought them
awesome.
donuts, but they didn't have as much enthusiasm.
We don't have the evidence anymore.
And then it's funny, and then like somebody sent that picture, the world is yours.
Yeah.
Oh, cool.
Without have no clue what it's from. So it's like, well, of course I had to get it
That's
framed
that
and put
email
on.
thing. That's that email thing.
Yeah.
Like
so it's like, on one hand, it's like I'm really grateful that somebody sent this, but I would really love to be able to say thank you. And then Tanner was here a couple weeks ago. He let us have this beautiful painting back here.
Awesome.
So again, that gratitude.
That's really pretty.
And by doing that, it's like, guess what just happened? TJ just got a plug. Tanner just got a plug. Nameless person over there got a plug because nobody knows who it got from.
We should have a finding the owner.
But here's the thing: from
gratitude,
from a human. Now this people are probably going, well, what does this have to do with capital? You're not going to get your capital unless they have a relationship with you.
Right.
Period. End of discussion. You could have the best business plan, the best perspectives. You could have the greatest English, but if they don't like you and they don't know you, case closed.
Because at the end of the day, it's still a people-to-people situation.
Absolutely, absolutely. And like when you send something, you don't do it with the intention of getting something, but instinctually as human beings. Like Tanner left you that one?
The big one.
The big
one.
heart, yeah.
So if Tanner calls you, even if you're busy, you'll take his call.
Absolutely.
Because it's like, okay, you thought of me and my team, and you cared enough to spend 30 minutes, an hour, whatever it is, to do that.
Because again, it goes from, if you're constantly touching 1,000 people,
right.
That sounded bad. If you're constantly interacting with 1,000 people, but 3 of those 1,000 bring you donuts,
Yes.
send you a note card,
Yeah.
whatever.
Yeah.
Who are the three that you're going to think of?
Those three.
Yeah,
It's true.
Yeah.
And we talked about that briefly before we came on here, is that a lot of people want to get granular with the step by step, but honestly, that's probably the most powerful thing you can bring to the table if you're kind of not as strong as some of the others.
Well, they want to get real mechanical. And the mechanical side of it is build your business plan, have your prospectus, send it out to, go to family office, buy the database for $400. I mean, I'll sell you a copy of my database for $400 if you want the same thing. But I'm just trying to give Richard some business. The point being is then you start emailing them, but they still don't know who you are, and and they learn who you are by the actions that you show at the end of the day. So they may take your 15-minute call, but if you don't say thank you, or you don't send a thank you card, or research who that person is, maybe they went to, Clemson University. So you get something from Clemson University and you send it to them. Guess how you do that? Really simple. Go to Amazon Prime and just order a Clemson University hat and send it to them with a thank you card. Hey, I saw this hat, thought you would enjoy it. Thank you so much for 15 mintes of time.
Or if you have a better relationship with them, you could be cheeky and send them an Alabama hat.
Yes, absolutely. And so it's that whole dynamic. Now, we're talking about doing it from across the country. If you have the opportunity to get into their office, then you can peruse the office and see what else is there. You'll see that, maybe they love golf because there's several, golf outing photographs in there.
It's so weird because we talk about how, like, even in the shows, like every week there's a general theme of all the shows. So and I've already talked about the Zuckerberg Institute, like how last week I was at a pitch deck meeting. Well, I was on a call with the group yesterday, and it was talking about introductions. And I'm going to just, blatantly not steal, but borrow from that call, which was, instead of going, hey, Casey, I'm a real estate investor, da-da-da-da-da, it's like, hey, Casey, what are you doing? What are you up to these days? She tells what she's into, and then I have 2 to 3 canned responses so I have 2 to 3 different ways I introduce myself. So if she brings up real estate, I'm going to go the real estate route. If she brings up entrepreneur route, I'm going to bring up the entrepreneur route. If she brings up something completely different, that way we can immediately start that relationship soon. And I only bring that up just because it's very exactly what you just said. If I'm in the office and I see a lot of football stuff, well, let's talk about football.
Yeah,
let's talk about football. Absolutely. And that's a connection point, because here's the thing you're connecting with. You're connecting to what's important with that person. You're learning about that person, and that person feels like you care about them. You're not there just for the money. And you might still be there just for the money. But here's the thing. You may also find during that courtship phase in there that maybe there's not a match here.
Yeah.
So I've had that. I turned down a lot of money last year from people that just weren't a good fit for what our goals were and our objectives were. They weren't bad people. They just didn't match. It wasn't a good synergy. And it's kind of like dating. You date a few people and then you find the right one, or he's the one or she's the one at the end of the day. But you don't just marry the first person you date, because there's that may not be the best fit. It might be.
would.
Oh, goodness.
Well, you did propose last week. Didn't you propose last week?
That was a joke.
It's still trending.
Facebook.
He did his research on you.
Facebook hack.
I love it.
Facebook hack.
But
so
anyway.
Yeah. So let's, because we're running out of time very quickly.
Okay.
Yeah.
All right.
We've got a meeting. We've got this. Is there any? Once you get the yes, that's obviously that's very granular.
Yeah.
How do you get to the yes? As far as, like you said, give me money. That's the last way to go about it. But at the end of the day, that's why you're there.
The best way to get to the yes is, number one, you want to make sure that you're working with a team and a company that has their like-mindedness. So if you're throwing your deals, and this is what often happens, people will put their deal out to say they'll blast it out to 1,000 people, and they're like, nobody ever responded. But then you look at those companies, and they're like, they're not interested in real estate, they're interested in tech. So you send it to the wrong audience. So, but once you get to that point where you're talking with them, you're having a conversation, they're going to lead the entire thing, because they're going to control the entire process. So they're going to want you to fly in, they're going to want to talk to you, your team, you're going to have meetings, they may fly out and meet you, you may go play golf, you may go do dinner, whatever they want to do to, how do you say, get to know you better at the end of the day. And then they're going to make a proposal. And at that point in time, your proposal will either work or it won't. It may not fit the plan that you built, but you take the proposal and see if your plan can be modified to reach theirs. And it's just a revisit of the number. And oftentimes, like, this is a great question, or question in my head. People say, well, what's the perfect business plan? And my answer to that is the one you believe in. That's the perfect business plan. Well, what if that doesn't attract the money? Well, it will attract the money because it's about relationships. It's not about the numbers. The numbers are just a projection. It's just a nice idea. At the end of the day, the numbers can be changed based on cost of capital, the projections, the revenue, and everything else.
And you might find a better route.
Yeah.
You never know.
And besides, there's 7 billion people on the planet. You just need 1 or 2 to say yes.
Absolutely. Absolutely. Yeah.
So as far as like you raising capital, are you placing capital as well, or are you only notes, or is there any other niches that, like, what are you into at the moment that maybe somebody in the audience could go, oh, I can serve, or I can provide value to Troy?
Well, I appreciate that. We are placing capital for a couple other firms right now. We're raising, one firm is a $100 million firm that we're raising capital with on them, and we're going through their model, and we're dissecting it on a retainer basis, and then we'll get a piece of the company as well. So we're doing that.
Is that specifically real estate, or just across the board, whatever?
No, that one is specifically real estate. It's a company that's come up with a new technology for realtors, ironically, and so we're seeing how that fits in the marketplace and modeling it out and testing it right now. So that's just one thing. But yeah, we do raise capital for different firms, different industries around the I say the world.
Yeah.
So I know you have a book. What's the book?
Power of Paper, Troy Fullwood. You can get it on Amazon.
I'll drop a link.
Yeah.
Anything else we could do for you today?
No, I appreciate the opportunity just to be here with you guys. You know, flying in from Arizona to Dallas. Spending my time and spent all day in the studio yesterday with the Academy.
Dude, man, quick plug to Troy here. He got here about 2-ish.
Yeah.
And literally filmed from 2 to 8, just Academy video. Boom, boom. So shout out to Troy and Tommy both for just being troopers of just going. So we got a ton of Academy videos.
You'll be there tonight, right?
Yes, I'll be there tonight.
Unless you're sick of us.
Yeah.
I'm just kidding.
I'm loving it. This is fun and refreshing and exciting.
Yeah, so come to the event tonight.
Any final questions for the Mr. Fullwood?
Honestly, I'm so intrigued by all this just because I think it's really creative. And I think it allows people another avenue through the market changes. I hate fixing and flipping, so I love this conversation. I'm good on questions for now, unless you want to go down more rabbit holes, but I know we don't got time.
So I'm Ryan with Propelio. So if you're looking for liens, you're looking for websites, you're looking for comps, check out Propelio.com. We also have the Academy, so Propelio.com/Academy. That is an entirely free to use service. We've been able to source professionals like Troy here to come in, shoot Academy videos, and basically that's just your easy button, your how-to on how to real estate invest. I read a post the other day that I did not respond to because I didn't want to take it personal, which was, if it's free, it has no value and they don't value their time. And I wanted to have a strongly worded rebuttal. But you know what I realized? It's not about me, it's about him. So I was like, okay, move on. But yeah, Propelio.com/Academy.
He's so wise.
I know. If you're not subscribed to YouTube or Facebook or follow us on the Propelio group on Facebook, do so. If you have deals in the DFW Metroplex, send them to me so I can send them to Casey. So Casey will pay me because I sent them to her.
That's true. I do handsome referrals. And I can help you close the deals as well. So
anything else you're looking for? Other than deals?
I'm looking to meet all of you guys tonight at the Palace Theater in Grapevine, because there's a lot of people that are tuning into these shows. I'd love to meet you. So come find us and come listen to these amazing people like Troy who are going to give you a lot of content. Somebody asked me the other day what the catch was with all this content and all the free stuff. And honestly, yes, they have some services.
Hashtag finding Miss Harper. That's the catch. Find Ryan a wife.
Ignore him. Although if it happens, it happens. But I just wanted to honestly just give a shout out to you guys and all the stuff, and Troy for the many hours that you're putting into it, because if you understood the mission of Propelio and Daniel and everything that's out there, it's really to help you guys find the tools to make a better life for yourself, whatever that looks like. So just offering information and things like that. So
Troy, final thoughts?
Don't be afraid to go big. Oftentimes we limit ourselves. The world of money and raising capital is unlimited. It literally is. The capital doesn't go away. It just goes down a different road. And if you want to go and play in that space, then force yourself to level up and go big, because it's not one of the things. So real quick, one of the things I learned about when I first started raising capital was that Wall Street was already there. They were just waiting for me to get there. Wall Street wasn't going to come down to my level. I had to go up to their level. And the same is true with anybody out there. You can do the same thing.
I love that.
Yeah.
So Troy will be speaking tonight at the Propelio event along with Corey Peterson. We'll also have a panel between Corey, not between, but with Troy, Corey, Eddie Speed, and Daniel Moore.
Yeah.
Awesome.
We will be live streaming that the event on YouTube.
Nice.
And the link is already up. I'll drop it in the comments here as well. But that's it for the day. Troy, no, I almost called Tommy Troy. Almost did it again. Tommy, can you take us out? We'll see y'all later. Thanks for being here for this.
Thanks, guys. Take care.
Thank you.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Lifener.
Hey everybody, I'm Ryan with Propelio. If you like what you saw, please subscribe. Turn on those notifications and stick around for more. We have tons of content like this all over our channel. So if you want to learn more about real estate investing, stick around, watch Propelio TV, and we'll see you later.